Morning, Steve Free in Chicago with the morning grain comments. Well, everyone's had a day to digest USDA's numbers, and overnight corn and soybean prices are unchanged, and wheat prices are down about 4 cents. Other than that, the news overnight, China's December trade data was not as bad as people had feared, and actually a little better than some had expected. The Chinese stock market was lower, closed lower, but afterwards the data is actually helping U.S. stocks, and that could offer some support to the Chinese stocks tomorrow. Also, crude's trying to bounce off the nearby contract at $30 a barrel. That's bringing in some short covering and offering some support. The problem is the market is still concerned about too much supply and continues to be experts forecasting crude trading below $30 a barrel. As far as the grains are concerned, the big surprise in the report was that the USDA estimated winter wheat acres here in the U.S. for 2016 lower than expected. Some of the locals in Kansas, Oklahoma, and Texas, where the acres are down, are not overly surprised, but it did surprise the market. In general, the crop conditions are favorable. World stocks are up, and world trade is down, so it really doesn't change the picture of the wheat market right now. And now we'll just tend to focus more on next year's crop production. As far as the corn numbers are concerned, pretty much unchanged. It did lower exports. They still have a high carryout. The big question mark is, will some of that wheat acres go to corn next year and add to the supply? In the bean market, a lot of interesting changes. They lowered the soybean crop. They lowered our exports. Some people think they did not lower the crush as much as they should have, given the competition out of Argentina. We did note that soybean imports for the month of December in China were bigger than expected, and so that demand continues to be strong. I think the soybean market is caught between those who feel that the carryout's going bigger and are bearish to prices versus those that are watching pretty closely the Brazilian exports of bean pace. It's slowing down a little bit due to corn exports, and that could shift some demand to the United States. We did have a stopper in the January bean deliveries, and we'll see if the market can kind of keep in a tight trading range. Support underneath the market for Chinese buying, but resistance over the market because of just too much supply. Also, we'll see if, since USDA dropped bean acres in last year's crop, will farmers plant more bean acres here in the U.S. in 2016. So when we look at the private guesstimates of U.S. carryouts, for beans, the range is from 470 to 525 versus USDA's 440. In corn, ranges from 1,800 to 1,900 versus USDA's 1,802, and in wheat, 945 to 970 versus USDA's 941. So most of the people think that the carryouts will get better, which should offer resistance to prices. Funds bought 10,000 beans yesterday, 12,000 corn, 9,000 wheat. Still estimated to be short 72,000 beans, 150 corn, and 87,000 wheat. The next 2 days, I'll be out looking at the ADMIS annual broker meeting. So hopefully we'll get some insight from private economists out there and be back Tuesday with some insight as to what they look for as far as prices are concerned. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.